The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 386. You get the Nasdaq up 155. S&P's up 44. Gold down $8.70. 1508. That doesn't look bad, folks, but gold was up at 1560 up there.
I got to check my ears with all these numbers you're putting out, man. What happened in the last hour? No, we know. We'll get there. Yeah, go for it.
Silver down 19 cents, $16.87. Light sweet crude. Look at that bid. Up $1.50, $56.41. Notes and bonds. You got the 10-year down 19 ticks, 129.25. 30-year off 24, 162.22. Now the notes and bonds, folks, it all makes sense. That's the reality. They finished their ABC structure on the way up. They have been going up since April. My take, you get a natural retracement on the way back down. King dollar up 267 ticks, trade 97.465. The euro is at 111. The yen is at 106.41, and the pound is out here at 120 to 1 U.S. dollar. And bottom line is, it didn't take much, to basically get this market going topside once again.
Delay of tariffs. Tariffs news will do it, man.
Tariffs news will do it.
Dave White's in the den. He said to me the other day, I said, oh, you putting out an update anytime soon? He said, I don't plan on it. He said, but you never know when a tweet's going to come, man.
Yeah.
You never know.
So we just went from 28.66 to 29.35 in the S&Ps, folks.
Yeah,
you got to love it.
2% pop everywhere.
Let's get over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as they do every Tuesday, Wednesday, and Thursday. And don't forget, folks, you talk about defined risk. You better have defined risk in this marketplace, okay?
No matter which way you trade.
No matter which way. Every trading day right here, you want to understand the option market, option strategies, great program, futures, 11 to 12 Eastern Standard Time. If you haven't test-driven yet the Thinkorswim platform, it's an outstanding platform. Just come over to our website at TFNN, hit the banner, bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hinks, blink, and it's green.
Another boring day in the market, guys. I mean, just nothing really to keep your attention in these markets. Just don't blink. Exactly right, Tom, because, there was, it shows you something. I think what happened in the last few days and then what happened this morning shows you how tied this overall stock market is to U.S. and China trade on negotiations.
Yeah.
So it really, interest rates, gold, commodities, everything is tied to U.S. and China. Now, should it be this tied? I don't know if it should be this connected, but it is. And you have to trade the market that is in front of you. And right now, this was nothing short of a melt-up in terms of indices in their futures and the corresponding sell-off in all risk-off assets, frankly. Gold, the range in gold today is going to be massive.
Yes, it certainly is. Well, the reality, though, it does make sense because our large multinational companies make everything in China.
Sure.
They're just trying to figure out who's going to pay for this. Do you know what I mean? Is that the company? Is it going to be the supply chain? Is it going to be the customers, right? So someone is going to divvy this money up. So every time that the tariff is not on, I can see why they want to go up. When it's on, it's like, who? Because I don't think the supply chain has it figured out yet who's going to get stuck with the bill. You know what I mean? So
it's one of those things where both the U.S. and China are trying to protect their interests, right? U.S. would like no tariffs and to just compete with open economies, because that's when our economy does the best.
Sure.
When we can just compete. But China is not a democracy; they're a dictatorship, and guess what? Their interests are different than ours.
Right.
So, and I still think this is going to be a much longer negotiation than sometimes I think these markets are prepared for.
Yeah.
Oh, I agree. Yeah, this is a whole change of dynamic. There's no choice about that. I mean, you're going to have surprise changes, moving. There's all those different dynamics. There's no
it's still fun though.
Oh,
These are fun
it's
markets.
awesome. Hey.
I don't remember a better summer for trading in the last 10 years.
Yeah, there's no doubt.
And it's like everywhere, like you said, gold. We just said crude oil jumped $2 on that news, from $54.50 to about $56.50.
Corn was down limit yesterday.
Yeah.
I mean, everything is rocking.
Yeah, you know, that corn market, man, that's amazing that they had so much planted after all those floods. That was that came out of nowhere, right?
That was what put a little premium. Remember, because the weather was so poor in the Midwest, they just weren't sure if the corn crops, because remember, corn takes longer in the ground than beans.
Okay.
So they figured as the weather kept dragging on, that people would just switch over to beans. Well, it turns out clearly from the WASDE report yesterday that they didn't.
Yeah. You know, Kevin, there was a couple quotes in Bloomberg yesterday, and I had brought them up in the afternoon. I hadn't seen something like this in a long time. And what it was is that there was, I forget the name of the broker dealer, but there was an option in commodity broker dealer. He sent a letter out to his clients crying foul that he thought the USDA were coming out with the wrong numbers. And I looked at that. I says, oh, my God. I says, I'm glad I'm not a client of these people, because it is what it is, man. Do you know what I mean? And I can understand, and I've seen it. I remember, the reason I remember this so well, listen to this. In 1998, when Greenspan and Rubin came on the air at 3 o'clock in the afternoon and brought the interest rates down like 2 points, I was screaming. I was on the air and I was shot. That ain't fair. That ain't fair. I says, oh my God, that ain't fair. Right? Give me a break. That was how naive I was. You know what I mean? Realistically.
Yeah.
Anyway.
You know, the definition of fair is kind of a moving target, isn't it?
My God.
Context is everything.
It is. It is. I mean,
and that's the key that we talk about all the time is you have to be ready position-wise, for whatever can happen in this market, be it commodities, be it stocks, be it futures. You've got to be ready for the expect the unexpected. And that's why we teach risk definition and making sure that whatever risk you have on, it's defined. And you're basically controlled.
Yeah. I mean, Apple, now they're one of the biggest players, right? 5%, man, 5% in a heartbeat. Oh my goodness, right? And you could have seen a lot of people maybe being short in that in terms of.
Remember, Apple, Tommy, was just $220.
Yeah, right.
So I mean, this market was $3,030. And so, it went down between 5 and 6%. Do you think it can't go back there if the uncertainty around U.S.-China trade starts to dissipate?
Oh yeah.
I mean, it can absolutely go back to those levels. So yeah, the first day when news like this comes out, just like I say on the first day of a big sell-off, probably not the day to fade that move is the first move. Let it simmer for a little while.
Yeah. That's a good. Let it simmer. I'm going to use that one. Like, let it simmer, folks.
Hey, listen, it's a fact. There's no doubt about that, man. And what ends up happening, of course, is that these moves are so massive and so fast that. Bottom line, you can see people pile on in a second.
Right. I mean, you go for 5, 6, 7% a year, right?
Yeah.
Well, you just got an apple in 10 seconds,
Exactly.
man.
Exactly.
Don't be a bug on the windshield of this market, guys.
No way. That's right.
Splat.
Oof. Lots of bugs out
Folks,
there.
right here, 45 minutes from now, we talk defined risk. You're going to have defined risk. Kevin, you have a great one, safe one. We look forward to the program.
Thanks for having me on, guys.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 437. You get the Nasdaq up 166. S&Ps are up 50. So if we get over first and you take a look, if you want to see just a true rejection in price, folks, the NDX 100 yesterday. So we take a look at this NDX. What you're going to see is that your high. I don't know how this.
Somebody wants to talk to you. I think you got to lower that volume.
I know.
You're a busy man.
It's low.
Well, that's not that low.
Yeah,
I think that's what everyone's saying.
So the high of the low of the 5th, 183.51. That's the high of the low. So first time we came down, 75 million shares. Next time we came down, 49 million shares. And watch what you had yesterday. Yesterday you tested that with 24 million and rejected lower price. So that set up the bounce. We go over to the SPY, what you're going to see, this is really wild, the SPY. Well, actually, here, no, stay with the Q, because my take is that the Qs actually can really get to the highs, and the reason being is that this was the benchmark that I'm looking the S&P to go to, and that's the low of the 31st. 189.32, and we went to 189.32 in the Qs today. That's telling me that this thing's going to try to get up into the highs. The SPY... What the SPY did, you had the huge contraction. You were coming into 288.21.
Okay.
178 million. You went down again with 140. Couldn't handle it. Then you did 65 million yesterday, and you get to 287.02, and 288.21 was the number. Now the SPY I'm suspecting we're going to get up to 295.20. And if you want to see the ultimate in this, though, as to contraction of volume, happened to be the Dow Industrials. And these are the 3 dates we got to look at. We'll look at yesterday, and then the 5th and the 7th. Okay, and when you see this, you're going to see that it's just the market's tired, you know, of going down. Yesterday, look at that volume. 611 million.
Yep.
The 7th was 1.08 billion.
Yep.
And the 5th was 1.17.
Yeah.
And, you know, when you see something that's that dramatic, your probability is pretty good that you're going to get the bounce. It's so wild, you never know why. You know what I mean? And then all of a sudden it comes out of nowhere, you know? And then if we go over the correlation, if you want to go to the correlation of the bonds, what you're going to see is that the bonds, their volume died on the vine. In fact, when I was doing this morning for the newsletter, I had to make sure I had the right contract, because what you're going to see, you know, your first high out here was on the 7th, and you had 2.9 million contracts, right? Well, Friday, we only did 1.5. Yesterday, you only did 1.1.
Yeah.
You know, so I was like, okay, this is getting tired. And it would make sense, because you've got, and then I took the 30, so watch, you take the 30.
And just as you pull it up, I mean, last week was mammoth, man. We had 1,000 points down in the Dow, 1,000 points back up, almost in the span of 24 hours. So, you know, unless we get that type of action, and today's early, man. It's just 10 o'clock. We just got the news of the tariffs. We'll see what happens. But yeah, you know, I mean, that volume for sure.
And so on the 30, your first high on the 7th was 720,000. Yesterday, you go into it with 270. You know, so it just tells, you know, it's just saying that, hey, listen, it's time for a break.
Yeah, and I was just going to say, yesterday's volume's not going to compare with those big days last week, because there just wasn't as much action as going on, for sure.
And if there's not enough buyers, guess what? You're not going higher. Yeah, that's what it comes down to. Gold. Well, that's okay. We got to look at gold. This is like
every market reacted one way or another.
Big time. Look at this. 1546.
Yeah, quite a high, man.
You know. Now that being said, this is going to be pretty cool, man. This is going to be a higher high with volume.
Sure.
And you know, for what we've actually done, this isn't that bad that it already rejected 1488.
Yeah, right.
You know,
for sure. You're almost $20 off that flash low, you could call it.
Yeah, I cleaned everything out again. Yeah, what a market, man.
We'll see if it did.
What a market.
We'll see. I think the market is still kind of reacting to this news in terms of. So can we go into the actual news of the tariffs? Because I believe it was till December 15th that the 10% tariff has been delayed. As of now, who knows?
Let's see, right there, right? Yeah.
Yeah, so they're going to, Trump administration will delay until mid-December. I think I saw the 15th as one of them. The 10% tariffs on some Chinese products, softening its position as the two sides spoke for the first time since the recent escalation in tensions. Stocks, of course, surging. While some tariffs will take effect on September 1st as planned, certain products are being removed from the tariff list based on health, safety, national security, and other factors, and will not face additional tariffs of 10%.
So everyone's going to be waiting. You know what's going to happen here, folks, is that everyone's going to be waiting for this list to come out.
Yeah. Yes.
Because I don't think it's transparent enough right now, right? As to what it's going to be.
I'm not sure myself, yeah. Yeah. So President Trump's announcement about the new duties ended a tentative trade truce that he had forged with President Xi. Now, this is talking about when he first announced the additional 10% tariffs, which sent shockwaves through the markets. Yeah. So
it doesn't say in there when the list is going to be out there. Here, let me see if we can find another one, right? Let's see.
Yeah, I'm not sure.
Okay, further. Products in this group include example cell phones. Let's just see.
I think it's pretty wide-ranging when I first saw it. I'm not sure.
Oh, I bet. Yeah. I mean, let's see.
Maybe the market wrap one will have it as in a live. Maybe one of the live ones.
Right here?
Yeah, or the one on, yep. Let's see. Just gonna. Yeah.
You know that all the Walmarts of the world, they're on that, whatever, I'm sure there's I'm not sure who's in charge of the tariffs, whether it's the Treasury, you know what I'm saying?
Yeah. Isn't Twitter in charge of the tariffs?
Yeah. Totally.
Okay, we'll break into it one of the breaks and dig it. But either way, it looks like I think it's just that last round. And maybe that's why they left open some. Like there'll still be tariffs, but maybe that last round, maybe all of the last round will be delayed.
Look at this. Out of the NDX 100, there's only one that's red. That's pretty intense.
And what?
JD.com's up 8.7%.
Chinese company.
NetEase 7.6. What is that? Dollar Tree? Yeah. Oh, that makes sense.
They got all
Dollar
that
Tree
cheap stuff from
7%.
China.
Hasbro. Look at that.
Toys was specifically mentioned in one of the headlines as in being delayed.
Yeah. You get the kids upset. Their parents are going to be upset. Parents are upset. It's trouble in paradise.
That's right, man. You gotta keep those kids happy.
There's no doubt.
Totally.
Man. Some of the
You gotta get their Avengers
simpler
toys
things in life,
totally.
right? We go look at the Dow Industrials. Look at this. It's hard to believe that Coca-Cola is the only one in the red. Well, that's not even saying it. Not
you
anymore.
smoked it, yep.
Yeah. So you got Apple putting 68 positive points in, 3M 33, Caterpillar 31. They're all green.
Can we go to Apple in the description?
Yep.
I said to you. So that's up about 5%. Market cap wise, just mammoth numbers, almost unimaginable. So we're now sitting at $952 billion market cap. Just for quick math, if they were worth $1 trillion, let's say if they were worth because they were probably worth a little bit less, as in if they were worth $900 billion before this news, a 10% pop would be $90 billion. So they're probably worth about $870 billion. And on that news, they got a 5% pop, right? Yeah, 5% pop. So yeah, they were probably worth about $900 billion. Now they're worth $950. $50 billion added.
In minutes.
In minutes. Probably seconds.
Stay right there, folks. Tommy and I come right back. Our phone number is 877-927-6648. Dow Industrials up 490, NASDAQ up 189, S&P's up 59. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
500.
Put a 5 on that number,
Put
man.
a 5 on it. Dow up 500, NASDAQ up 193, S&P's up 60. Let's go to our man, Mark in Bedford, Mass. What's going on, brother?
Not much, guys. How's TNT this morning?
What's happening,
We're
Mark?
doing good, man. How's the summer treating you?
Oh, summer's treating me fine. We're going to have some heavy rain this afternoon, so
Okay.
yeah. But yeah, the summer's been great. Can I put this in a bottle and save it for January?
Yeah, you can.
You can, man. Totally.
Yeah,
We'll have to,
that'd be fun.
Talk to MIT, see if we can invent a weather bottle and save it for January.
Wouldn't
That's
that be
right,
cool?
man. Totally.
Yeah, that'd be cool. You know, you want some cold water? I'll go down to Walmart, buy the bottle of cold water, and uncork that, you know?
Totally, man.
Yeah, totally. Hey, listen, I got a question for you. I've been in and out of TNA, and I want to know: do you think this rally in the S&P is going to continue for another day or two, or you think it's a one-day thing?
Okay, so let's take a look at this. This, you know, it's so funny just saying this because I'm sitting here looking at myself. I think the S&P's. I'm still at that price projection for that low of 29.58. Now we hit 29.44 this morning. I'd give it another day. You know, I wouldn't pull a switch right now. Let me just see something else. So you got the trend at 9.9. You got the tick. The tick should be explosive. This should be like a crazy tick number. It's not interesting. Okay. Yeah, I would get. You only get an 1161 tick reading, which, if you're going to pull back, that would have been like a plus 14 or 1500. So what that tick is, folks, so picture what that tick is. That tick is saying you get approximately 5,000 NYSE stocks. And when the tick explodes like that, what it's saying is that simultaneously, when you take all the stocks that are trading, you take who's buying on the bid and who's buying on the offer, when you get an explosive like 14, 1500, it means that everyone was pressing the button at the same time. And most times when that happens is that you can get a pullback in the next couple of days. In this case, there was no panic of buying, even though we went up that high. And it might have been it was too fast. Who knows what it was? But the bottom line, you don't have that signal. So I'd give it a couple more days, Mark. Yeah.
Okay.
You know.
All right.
And, you know,
right.
it would make sense anyway.
Tom, generally you think this is a dead cat bounce in
I do.
In a bearish market.
I do. Yeah. And
Okay. Because I'm the same way, but
what you'd be looking for is this.
I just don't like. I don't like going into January, February. I don't like what I think. I think this trade thing. Personally, I think China is going to keep talking, and every time we turn around, oh, China's talking to the U.S. Time for a rally. But you know, at the end of the day, I don't think they're going to really do too much of anything, because if you look through the history of China-U.S. trade negotiations, they always want to talk. They always want to say, oh, yes, we'll talk next week. But, you know, at the end of the day, what have they done? Not much.
Yeah, listen, there's no doubt that, I guess, we started the war. So now the question is, like, wars don't end quick. And then you forget why you started it. So when I look at it financially, man, you know, people are kidding themselves thinking that everything is not made in China and thinking that everything can be made in the United States. It's not going to be. You know, it's not even close. So the real question goes, where is the middle ground in all of this? And I would say that the big money is going to win, and the big money is the big corporations. They're sitting there still quiet, but they're only going to be quiet so long because everyone's trying to figure out. There's a great article today in the Wall Street Journal, and they're trying to figure out who are they going to charge. Who's the supply line? Like Home Depot's trying to figure out. The Home Depot in the article is saying, I'm not taking this heat.
They can't take it. I mean,
Yeah.
that's what,
And so it's going to be, well, you're my supplier.
Right.
You're going to take it.
Yeah.
Well, you're saying I can't take it.
Right.
And then, you know, so it's going to be who is going to pay the vig. Is the customer going to pay the vig, you know?
Yeah.
So we'll see where the rest of it goes. But I agree that we're in a volatile market, you know? And another way of looking at this market is just start, you know, what you can do, folks, is you just start following the Hang Seng pretty good. Because the Hang Seng is going to give you an indication, you know, how close that we're getting that, this may be something going on, meaning in a positive way. Right now, it's negative like beyond belief. The Hang Seng is down like viciously.
Yeah. You got action again at the Hong Kong airport.
That's
they were shutting down, I believe, check-ins, so no cancellations of the flights.
That's the other wrinkle. Is what will happen? Will we have another Tiananmen Square in all this? We
all
don't
hope
know.
not, but
and if that if we end up with another Tiananmen Square, look out below.
Yeah, I mean, hopefully China's aware that
it's serious business.
That is
and that
serious
is the
business.
wild card. That is the wild card. That's the wild card that
scary stuff over there, man.
Yeah, if it morphed from China to the mainland, there'd be
From Hong Kong to the mainland.
yeah. Thank you. Yeah, that would be pretty intense.
Yeah.
You know?
I just worry about Hong Kong because China has their mainland in control, and that's why they're so aware of. Because if China acquiesces to the Hong Kong protest, then maybe it would go to the mainland.
Right.
So China's not about to make a concession. That's a scary element of things. And how does that de-escalate? I don't know. Well, that's scary, right?
Well, and
guys, Tommy, are they protesting to be an independent country, or this whole thing started with this new law that they scrapped, I guess scrapped, about exporting their people over to the mainland for trial,
which is
but
no
now
such
I think
thing.
It's morphed into something much bigger.
Yeah, because two countries, 2 laws. Whatever the hell are they doing that? The bottom line is they're going to try to change. The people in Hong Kong want to change whatever's even coming. I don't know if it's 6 or 7 more years from now, because this changes again. I mean,
I think it's almost 30 years.
Is it 30?
2047.
Okay. So,
and that is what they're worried about. You know, you have kids over there or something, right? You don't want to say, it's 30 years down the road. We'll just become mainland China in 2047.
Right.
You know, you got a 5-year-old, a 10-year-old.
That's a blink of the eye. That's a blink of the eye. And go back to what you said, Tom, about writing the Golden Report.
Yep.
It was just like yesterday when you started that. 30 years, Tommy, is nothing. Just ask your dad.
I agree. Hey, I'm
crazy.
Unfortunately, I'm getting up there where I can almost relate. Again, no, it's wild, man. It is.
Oh man,
time is nothing.
Telling you.
Yeah.
Hold on for the ride, baby.
Well, I'll leave you with this, though. Tom, I remember the first day I walked into your office in Waltham, Mass. Before you went to Florida.
Yeah.
And I was sitting there, or not sitting there.
We had the TVs up on the wall, remember, and the donuts.
You were talking about how you started this whole thing.
Yeah. Yeah, crazy, man.
I remember 20 years ago.
I remember, it was 94, right? 93.
96, maybe 95, 96.
94,
95,
that was
96.
94, yeah. Crazy, man.
Crazy.
And what year are we in now? With 2019?
I think so.
God.
I know. We'll see.
Hey, man.
Okay, guys.
Have a good one, man. Have a safe one.
Thanks, Mark.
Yeah, you too. Take care, guys.
Take care, man.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow's up 485. Nasdaq's up 179. S&P's up 56. Gold's down $9. You have silver off 19 cents. Notes and bonds are in the red. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in a tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 420, Nasdaq's up 161, S&Ps are up 49.
We just lost 100 Dow points in a heartbeat, man.
In a heartbeat. You want to see a little volatility? I'm going to bring you over to Argentina for a second.
No, they don't got any volatility, man.
Oh, man.
50% volatility?
Yeah, they were down 40, I think 42 or 48% yesterday.
Yeah.
Right? Oops, wrong one. Go back there. There we go. So they're up.
They're getting a little pop, huh?
Yeah, they're up 11% today. When you see this, though, this
Bloomberg's
is
saying you can't access that data.
Look at this. Look at this.
Yeah, staggering.
Folks, if you're watching Tiger TV, man, this is like just, it's, they had the stat in this. The stat was over the last 70 years, there's only 5 markets that went like this, and 3 of them were Argentina.
Okay.
Yeah, and as a one-day move. That was that dramatic. I don't have the thing right here, but it's...
No, it's just staggering, man. It really is.
It's over the top.
Try and wrap your head around it. You almost can't.
If we go into the Argentina peso for a second, let's see how that's doing today.
I mean, so it would be familiar. It would be akin to the USU, elect somebody completely out of the blue, whether it was a Republican challenger on the far end of the debate schedule, right? And it would be somebody that's completely protectionist, I think is what I heard, right? So they're going to just lock everybody out, man. Only us, all this stuff. We've gotten a little bit of that in the U.S., I mean, that's where you see.
Yeah, they're not going to pay their bills. That's what's going on with the other side of it. See, the vice president is the one that never paid the bills, and they had that fight for years. I think she was the president like for 8 years or something.
I have no idea what you're talking about when you just say pay the bills. Just as I don't know what you're.
They default on their bonds. So
and how does that play into all the companies getting cut in half for their value, though? I'm just going to.
I don't know, but
they could be
the marketplace itself. That's they just turn around.
No, I understand
and
that
they
part
default
of it, right.
over and over again. I mean, look at this peso. This is like sick.
It's been happening for a while. Pretty crazy.
I'd like to know what do people. I mean, they're so used to it. They must put their money in something else. They don't. They certainly couldn't hold pesos. I mean, look at this, folks. So 2014, the peso is 6.5 pesos to $1.
Yeah, and even before the run yesterday, we've been at above 40 for six months. I mean, we're above 40, back of the 2018.
It's like
scary stuff.
It's insane.
It is.
It's like, oh my God.
Speaking of what you might invest in, how about Bitcoin? Let's jump over, man, because that would be one of the things that when you're in some of these countries where you fear gross inflation.
Oh, yeah.
that you've seen, you
Right.
know, and most of the time in countries like that, like Venezuela, et cetera, they try and clamp down on the ability for citizens to access these markets because inevitably you're better off. But Bitcoin, as you can see, as we've seen gold pull back, I mean, Bitcoin's kind of been trading a little bit with gold, which is interesting when you start getting that type of association, right? I mean,
Well,
you saw that run.
I would never buy a Bitcoin, right? But if I was where we just were in Argentina, I'd be buying Bitcoins all day long because it totally makes sense.
Definitely.
I mean, so there's plenty of countries evidently that it makes sense to put your money somewhere else.
And if you correlate things, I think the big run in gold started May 31st about.
Yeah.
And look, you know, June 4th, we were down at 7,300 and you ran to almost 14,000.
Yeah.
And then, you know, we've seen things back off today. You've seen gold back off today. So it's a little bit of that safe haven as it's gained a little bit more stability, and I say that with extreme caution.
But it's true.
But a little bit more, you know.
Well, compared to what we've been looking at.
Compared to
what we're looking at, right? No doubt.
Yeah.
The let's see, this is going to be a biotech, no doubt. This is
I
up
see gut cancer. So
$17.
Good stuff. You always like to see advancements.
Yeah. So this is this company.
Yeah. So there it is. Inhibitors, treatments for various types of cancer diseases, including gastrointestinal. So it looks like gut, the intestines, maybe intestinal cancer. Yeah, clears bar. So let's see. Shares of Decipher, maybe, pharmaceuticals, rocketed higher to more than double on Tuesday after an experimental stomach cancer medicine succeeded in a pivotal study. So they plan to file an application for its medicine as a treatment by early next year. Yeah.
And that's really good because stomach cancers are really bad,
yeah,
right?
I mean
seem
they
to
all
take
are, of
people
course,
down.
but some you have a greater chance than others, right? And it is. Can you just scroll up a little bit to see what? So, no. I was going to read some of the patients. Let's see what. So patients who failed at least 3 other lines of therapy that received, and this might be the drug, repretinib in the study survived for 5.3 months longer than those receiving a placebo. Pretty interesting when you
without disease getting worse.
Yeah, and you have to come off where other applications have already failed, and maybe that's why it's still in that discovery stage where you're not going to give it to people on the first chance because it could go bad. You know, there could be that's why the FDA does this. And so while the study determined the medicine was not statistically significant in showing objective response, the overall survival of the patients on the drug was 8.5 months longer than those on the placebo. That's great. So hopefully they just keep going, man.
8.5 months is a long time.
It is a long time.
It's particularly a long time when they said that they didn't get any worse.
Yes.
Meaning that, you know, what happens, unfortunately, folks, is that the end-of-life drugs here, that, they can get them, and they cost you a fortune, but if they only last for a week and a half, and they don't make you feel any better, it's like, okay, that's a...
No, and I can relate to that. I mean, a lot of people, you don't want your life extended if the quality of life is abysmal, right? We can all relate to that. So,
and then when you're there, what do you do?
It's tough.
That's the, it's real easy saying that I'm not going to do that, and then all of a sudden you're there. It's like, okay, what are you going to do? And you don't know until you're
and
there.
everyone has their own decision, man.
Exactly.
Right? You just make that choice for sure.
877-927-6648. Let's get into the NDX this other way. I'm going to go into cash NDX and see what this number is. So in the cash NDX, that number was 77.74.
Okay.
And you hit it, 77.78. Yeah, okay.
And what's the one to the right of it, just out of curiosity? 77.69, okay.
Yeah. So 77.78.
74, I think. Yep.
Yeah.
Yeah.
Yeah, so we'll see where this shakes out. And volume-wise right now, so on the NYSE, you got 246. On the composite, see, you're at 778 already. This composite wants to go higher. So, Mark...
Mark and Bedford.
Yeah,
Mark
exactly.
And Bedford.
So what I would do, Mark, is this composite's all going to have the juice also. So this composite, I'd say, wants to try to get up right up to those highs of even...
I think he was trading the S&P.
He was.
Okay.
My point is that I wouldn't, I want to go short the S&P myself, but I wouldn't go short the S&P until this thing tries to get up into those highs.
Okay.
Because I think the S&P will lag it. That's
okay.
That's kind of where I'm going. Do you know what I mean? So you can try to... You're trying to get information off the strongest index, meaning the NASDAQ, the composite, because, see, the composite's going to have volume out here today, too.
Oh,
We're already at 770-something here.
You got Apple up 5%. Yeah. Watch out, man.
You're at 783 already.
Yeah.
So this is going to do like 2.2, maybe 2.3 billion.
Sure.
So lines up that, guess what? You know, how deviant would that be that you go back to a high in the NASDAQ?
Sure. Talk about volatility, man.
Yeah, after this. Let it go back to the high. You get another tweet coming out over the weekend. We're back.
What's it going to say?
It's going to say now we're going to go up to 50% tariffs.
Yeah, right.
And China's going to pay for them.
All of them.
Yeah.
They're going to write a nice big fat check.
Stay right there, folks. Tommy and I come right back. We have the Dow Dow up 415, NASDAQ up 154, S&P's up 48. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 438, NASDAQ 160, S&P's up 51. S&P's like that 50 number, man. It doesn't want to get away from that 50 number, which is pretty wild because
Just like the, go ahead.
Yeah,
As you say, just like the Dow likes the 500 number.
Yeah.
Just like the NASDAQ likes the 200 number.
That 200 number in the NASDAQ's pretty intense.
It is.
Yeah. I mean, look at this, man. So you're right up, you got right into the highs of last Thursday, 29.40.
Yeah.
We got 29.44.
Can we back it up? I just wanted to see in context of where we were all last week in terms of we've now erased everything, I think. Let's put it on a daily. Do we have daily? Where
Yeah,
are we?
that's
Daily,
very tough.
perfect. Just
Yeah.
3 months. I just went in. I'm going to zoom it in because look at. I mean, we are. So the fall off that was last Monday, right? In terms of a week ago Friday, we closed at 29.32, and we're right back at that level. So it's like none of this to erase all of that. You know what we're going to do?
Yeah.
We're going to wipe it off the chart. We're right there.
Right. No, I know.
It's crazy,
I
man.
know. It's pretty intense. And, you know, we're still in earnings season.
Yeah.
You know? So
I think we got Walmart on Thursday, man.
Yeah. So let's go over to Walmart.
There'll be some
because-
discussions with them on that call, I imagine, with what they think of these tariffs and how they're gonna. What are you know? I would be. What are you doing to anticipate the volatility?
Right.
If they come down the line December, if they don't, what if
Exactly.
something escalates? And guess what? We get another tweet a week from now. Oh, they're back on tomorrow. Right. I mean.
Right.
Yeah.
Yeah, look at those numbers on Walmart.
Yeah.
90 days, they expect to take in 130 billion, folks, and take $1.22 to the bottom line.
So what is that? That's about $1.5 billion every day. Whew, I can't do math that big on the fly.
Stay right there, folks. We got Fast Mac coming up next, and we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White, direct this afternoon. Thanks, pal.
Thanks, man.
Ride 'em, cowboy.
Oh boy.